Hey everyone, this is Justin Lito, CEO and co-founder of LevelEsq. Some of you may remember us as Level Insurance. We've now totally rebranded because not only do we provide you the same great insurance that we always have with Level Insurance, but now we can give you the money that you need to invest in your case costs with lawsuit cost financing. So let me tell you a little bit about how it works. You have money out on the street all the time, and that is your investment. If you lose that at trial, that money's gone. Obviously we're all in it for helping the clients and for securing our fee, but at the end of the day, that investment of cost that we put into the case is the riskiest part of our business. And until we invented litigation cost protection by Level Insurance, there was never really a way to protect that investment. And so we set out to do that. That was back in 2011. It took us about 5 years to build models, to go to carriers, and to really launch this business. And in 2016, in a limited amount of states, we launched litigation cost protection. Now, 5 years later, 6 years later, litigation cost protection is a nationwide program that benefits lawyers throughout the entire country. And let me explain how it works. The way it works is you go online to levelesq.com, levelesq.com, and you click on Buy a Policy. The purchase of the policy takes about 3 minutes. We don't do any individual underwriting of your case. We don't look at the merits of your case. We don't delve into the decision making for your case. Instead, you enter your firm information, you enter the case name, you click a couple of boxes to show the case type, and you select the amount of coverage that you need. So a lot of times when you buy insurance, you have to go through a rigorous quoting procedure. It takes a long time to find out what it's going to cost. You don't know what your deductible is going to be, what your co-insurance is going to be. We got rid of all that stuff. None of it is here. There's no co-insurance. There's no deductible. There's no quoting. It's all simple. 7% of whatever you choose. So if you have a medical malpractice case and you think it's going to cost you $100,000 to litigate the trial, you put $100,000 in, it costs you $7,000 for that policy. You get the policy issued to you and you're finished. You put it in a file, and then if you lose that case at trial, every dollar that you spend on that case, up to $100,000, is paid back to you by the insurance carrier. First of all, there is no reasonableness or necessity adjustment done to determine whether what you spent was proper or appropriate. What does that mean? If you have to hire 2 neurosurgeons instead of 1, or if you want to travel first class instead of coach, or you want to stay at an expensive hotel, or you want to bring in really expensive trial technology. These are all expenses that we assume your client is going to pay if you succeed in the case. So we will pay all those expenses in the event that you do not succeed in the case and you lose. No insurance adjuster is going to call you up and say, in the state of Iowa, a neurosurgeon only bills $500 per hour and you hired one at Stanford for $1,500 an hour, we're going to only pay you $500. It doesn't work that way. You get paid exactly what you invested in the case to the dollar at the end of the case if you lose. And as a trial lawyer myself, I know and you know that all real trial lawyers eventually lose at trial. You're not a real trial lawyer unless you've actually lost the case. So you all know the pain of losing the case. You may settle 100 cases this year and make lots of money. But that one case that you lose, where you lose the money that you invested, is the one case that you're going to think about that's going to keep you up at night. But with litigation cost protection, you never have to worry about that. It's both a sword and a shield. The shield is obvious. You lose your case, you get your money back. That's your protection. But there's a sword element to it as well. No matter how rich you are as a lawyer, no matter how much money your law firm has, the insurance companies are always going to have more money and they're always going to have more resources. And when you go into mediation, one of the swords that the insurance companies constantly use is the fact that they will continue to spend endless sums of money and will beat you into the ground until you settle for something that perhaps you aren't happy with, or perhaps your client isn't happy with. With litigation cost protection, you go into that mediation or that negotiation and you say, listen, I don't care about spending the money. I don't care if the last deposition that we took didn't go exactly as I planned. I am not going to settle this case for less than what my client wants because I have zero concern about what I spend because I'm protected by this piece of paper, by this insurance policy. parameters are simple. You have to be a licensed attorney. You can't have disciplinary history from your local bar, from the state bar. You can't have disciplinary history from the federal courts. And you have to buy the insurance within 120 days of service of process. But the coverage doesn't start the day that you bought the insurance. The coverage is retroactive to the day that you were first retained by your client. And as somebody who practiced in the area of medical malpractice and product liability, I know firsthand the amount of investment that you need to make even before you ever file the lawsuit. You have to hire experts, you have to do accident reconstruction. Some states require pre-suit. All that stuff costs a lot of money, and all of that is covered even if you didn't have the insurance when you spent that money. Another important aspect of the policy is that you do not have to appeal a trial loss. You can appeal, but you're not required to. If you make a claim, the insurance carrier will wait until your state's appellate period has run so that you're no longer able to make an appeal, and that's when you will be paid. However, if you do appeal the case, the policy itself will follow you through the appellate process and any retrial up to your limit. So, by way of example, if you spend 50 grand and you have a $100,000 policy and there's an appeal, the appeal costs you another couple $1,000s, and then you retry the case, you still have coverage on that second trial up to the policy limits that you originally purchased. In the state of Florida, North Carolina, and Utah, there are specific ethics opinions that say that the expense, the premium for litigation cost protection, can be passed on to the client as an expense. Now, we don't have opinions in every single state, but lawyers throughout the country have taken the opinions of those 3 states, which are typically very conservative states, and have decided that that is precedent for them to be able to enter or to be able to add that to their contract and pass the premium of litigation cost protection onto their clients. As a Florida lawyer myself, Larry and I, we went to the Florida bar and we asked for this ethics opinion. The Florida bar permitted the pass-through of the premium because they found that litigation cost protection doesn't just benefit the lawyer, it also has a tremendous benefit to the client. There's nothing unethical about you taking a video deposition and not doing it in person. There's nothing unethical about you not getting the top trial technology for trial. But we all know when you do those extra things, when you spend that extra money, the return is significantly higher for the client in the event of a win because you've gone that extra mile. This is really a revolution for plaintiff lawyers. It's something that will change the game completely in the way that you practice, in the way that you negotiate, in the way that you select your cases, and also in the way that you make your money, because now you know that all of the money that you're investing is fully protected. We've already done over $100 million in coverage nationwide. Hundreds of firms have taken advantage of it. If your firm has not, you should, and I'm sure that you have colleagues that already are. The rates are very reasonable. They're not bank rates, but they're not non-recourse rates. We typically charge somewhere between 0.8% and 1.5% per month. We track every single case separately as a separate sub-loan to your firm. All of that interest expense can be passed on to the client in most states because it's tracked that way. You know, when I was practicing, all of the money that I would spend on the cases would tend to get rolled from one case to the next. I'd have $50,000 in a med mal case. I'd settle that case. I'd spend it on another case. I would never actually get that money back for myself. It would constantly be interest-free loan after interest-free loan to my client. That is not a good way to run a business. No other business that we loan money to, no other small business does anything like that. Lawyers are the only ones who do it. But there's no reason for you to do it that way. Use the money, use the leverage appropriately so that money that you've had locked up for years in case expenses, get that money back so you can invest in firm expansion, you can invest in new lawyers, you can invest in marketing. Combining both litigation cost protection and lawsuit cost financing is the way to unlock firm growth like you've never seen before.